And a big welcome to everybody. M. Solomon here, mortgage auditors and foreclosure accountants. You can reach me at 202-270-2641. I'm also at Secondary Trade Desk, just like it sounds, at gmail.com. Today we're talking about current statements and next month's payments and how to spot a rigged statement. It's a good presentation. We're using an actual case and an actual account that's in foreclosure. I'd like to remind everybody we are accountants in judicial and non-judicial foreclosures, not attorneys, and the presentation is not for your legal rights and property. A special thanks to corporate music used herein and no copyrights claimed. Let's get going. Current statement and next month's payment. How to spot a rigged statement. And have you take a look at something. This was an article by National Geographic that's now owned by Encyclopedia Britannica. It was an article, actually it was by National Geographic Research Society, and I took an excerpt from this article. And here you can read, as the year 2000 approached, computer programmers realized that computers might not interpret 00 as 2000, but as 1900. Activities that were programmed on a daily or yearly basis would be damaged or flawed as of December 31st, 99. Turned into January 1st, 2000, computers might interpret December 31st, 99, turning into January 1st, 1900. Here's your issue. Banks which calculate interest rates on a daily basis faced real problems. It should be current. No, it should be consumers. Interest rates are the amount of money a lender, such as a bank, charges a customer, such as an individual or a business, for a loan. And here's the kicker. Instead of the rate of interest for one day, the computer would calculate a rate of interest for minus 100 years. That's your Y2K, folks. This article was entitled Y2K Bug. Instead of the rate of interest for one day, the computer would calculate a rate of interest for minus 100 years. Let me show you an actual case. You ready? Let's take a look. So what I'm going to show you is something that maybe I don't want to show you. No, something that I'm going to show you is mind-boggling. It's rewarding to me because I've spent so much time, so many years, trying to perfect what it is they're actually doing and try to uncover without any reasonable doubt, I know that's used in criminal cases, but to conclusively determine exactly what it is that's happening here and why a borrower in default is so much more profitable than a borrower who makes their payments on time. And we're going to start right here with a case that is just remarkable, coming from a major bank. This was part of the merger, I think, PNC Bank with National City out of, I want to say, Ohio. I used to sell to National City. I didn't very long. They were a horrible investor. Prices changed, and what they buy would change at the last minute. But nonetheless, this is coming from a major bank, PNC Bank, and again, what you're going to see here is pretty much hard to believe, if not stomach. We've got a 5/16/23 statement, and that would be followed by a 6/16/23 statement for a last payment that was made on 11/15/2017. So we got the 15th going here and the 16th going here. The 16th is obviously a late date for the subsequent, for the prior month. So payments are due on the 1st, and they would be late as of the 16th. And the next payment would be not charged a late fee up until the 15th. So what we have is a statement here for a 6/16/23, and I'm going to show you it's being backdated to 12/31/99. Reason why, I'm not going to go into it right now, but there is a reason why to backdate, and that backdate is what they call a Y2K. No mystery, no magic. It's just backdating everybody to 12/31/99, which I call Y2K. 12/31/99 would be the means and methods used to create homogeneous pools from one pool to another from any time period starting in 12/31/99. I guess you could even go backwards because you have an anchor date. All loans are originated on 12/31/99. It's done by the process of crediting and debiting, and what you have at the end is a net that is unrecognizable to the naked eye. Let me show you. If I take 6/16/23 backdated to 12/31/99 and bring it back to 6/16/23, I can't. The computer takes me to 6/16/23, 1923. So if I now bring it forward to 6/15/23, how do you go forward from 6/16 to 6/15? Because of 6/16/23 is 1923 going forward to 6/15/2023. And what you have here are 23.46 years brought backwards. A credit that continues backwards for 76.54 for a total of 100 years. And then a credit going forward for another 100 years. And look what the net number of days are or is. 1 day. Out of all that back and forth, you have 1 day. Now, you don't understand this. You're probably saying, what is he talking about? It's not important right now. Just understand that someone's getting hosed for 200 years of debit and credits here. And all this foreclosure, if it were to go down on the date we suspect it was supposed to go down, would only show 1 day of interest. It would be unrecognizable to the naked eye. All right, let's continue. And what we have here are the numbers. First of all, we looked at the statement. I'll bring it back up here in a moment. You might recall we had principal and interest as a outstanding balance. Did it hit you yet? Did you get it? I got principal and interest for $481,000. Isn't principal and interest, taxes and insurance something you use to calculate a budget? Come on, people, think. Principal and interest, a lump sum, $481,447. Escrow, which is usually taxes and insurance, isn't that part of your budget? Escrow and insurance are $159,733.72. I was provided this. This is not me making my own end alone or life alone assumption. This is what I've been provided in a statement by the consumer. It was provided a statement by a bank, the same bank we just saw. I got principal, interest, escrow, which is taxes, insurance, fees charged. That's a lot of fee. Fees charged, $12,739. Total it. I got a budget. Is that a monthly budget? Is that an annual budget? Is that a life alone budget? Is that a budget for 26 or 27 years? I don't know. But I'll tell you what, those are line items used for budgeting, not for outstanding balance. So the 481, 159, fees, escrow, principal, and interest comes out to 653,919. I'm going to be looking for that number. That's what I took off their sheet. I totaled it. But that's not your outstanding balance. The outstanding balance should be an outstanding balance is not broken down in this fashion. So I'm scratching my head saying, what the heck's going on here? So to continue, where I'm going with this is I took our budget here of principal, interest, taxes, and insurance. See right there, by their own admission, taxes and insurance, fees and charges. Those are budgetary items that are used to calculate a monthly budget in order to figure out a back-end ratio. We're coming up with the lump sum, so I'm looking for 653,919.95 to be my outstanding balance, and I have an issue with that. That's a weird way to calculate an outstanding balance, and sure enough, let's look at our outstanding balance. It says right there, what? 631,570.49. I mean, come on, folks. You really need to hire an expert to figure this one out. This individual's had this statement for I don't know how long, and he's getting ready to go to foreclosure. Looks like it's been through since 2017. What are we doing here? Have you looked at your statements, monthly statements? This is not a payoff statement, by the way. This is a monthly statement. So this amount that we calculated on a budget is not his outstanding balance. 631,574.9 is his outstanding balance. What does that mean? That means you've got two separate numbers here. You got that number. You got this number. 653,919.95. That's the budgetary items that are added to the outstanding principal balance. 631,570.49. This poor guy's getting hit with over $1.3 million in foreclosure. Last I heard, he wasn't living in a $1.3 million home, was he? I don't think so. Anyway. So we've got some real issues going on with this statement. Something's not jiving, but it gets better. It gets better. For starters, what's that? Accelerated amount of 852? 852,000? What's that? That's another 200,000. What's that going to? Maybe the boys club, I don't know. Any ideas? Leave a comment. Be sure to hit that I like button, whatever you say on YouTube. Don't worry about it, folks. But something I can go after, something I can lock onto is, how do I know that this principal and interest represents a budgetary line item? How do I know how many months or years does it represent? How can you tell, Mr. Solomon? The crowd's yelling, we need to know, we demand, we are naysayers, we don't believe in anything you have to say, but we like what you present. All right, that's all right. Well, what I'd do is I'd figure out what the monthly payment is, or the annual payment, and I'd divide it into that principal and interest. Your rate times your outstanding balance equals your principal in it. Oh, what do we have here? Interest rate. Good till 2/1/24. Can you read that? I can. Can you see? You may not see, but you can read. All right. So I got an outstanding balance, $631,570.49, and a rate of 3.25, which includes principal and interest. That, my friends, is going to unlock the door, and that is the key to getting out of this dungeon. Let the rest wallow and whatever it is in pain. We're getting out of this dungeon. We want to get out. We want to move on. We want to take our property and be done with this and do something that's equitable, fair for everybody. And we're going to show where it only makes sense for you to walk away with the keys to your home, because you did quite a bit to help the contribution to the economy and to banking. I'm going to show you how. But first of all, that principal and interest represents a certain number of years. And how many years is that? Well, I'm going to take my outstanding balance, bada bing, and multiply it times the interest rate. And that'll give me my monthly debt service, and that should tell me how many years are being buried into 481,447. Let's take a look. So here's what I found that I believe is so astonishing and so unbelievable because of a big bank link to it. The principal and interest represents 23.46 installments, okay? We figured out that 3.25 multiplied times the outstanding balance gives us our annual installment. The annual installment divided into the principal and interest gave us the number 23.46 years of payments or installments. Annual installment, 20,526. So the number of installments, I'm repeating myself, equals one equals the other. Now, the capitalized value of 20,526.04 annual debt service payments, going reverse at 3.25, affirms it's worth 631,570.49. These are separate accounts. And what's most important is 26.46 years backdates to the mark, 12/31/99. In other words, 26 years backdates 8,568 days from 6/16/23, which would be the following month's payment. It'll backdate from 6/16/23 back to 12/31/99. Y2K. There it is. There it is. The backdated principal and interest is added to escrow fees and charges. And from 6/16/23 less 36,525, it takes us back to 6/16/1923. There's your 10 multiple. Computers can't differentiate the difference between 6/16/23 and 6/16/1923. You got a Y2K case here and backdating. So we're wrapping it up. I thank you so much for staying tuned. Those that are still with me are ones that have the aptitude and have the intelligence to follow this stuff. The rest, they love the title, they love tuning in, but they don't last very long. They tune out, and I just, again, take my hat off to you for following this long. Let's take a look at the final analysis, or what is the final remaining analysis, and that was this over here. Pointer, please. We got 852, I don't know if you can see it, 852,090.52. What the heck is that? That's another number, another capitalized amount, I guess. And I couldn't seem to tie it out to anything. The difference between that and the 653,919.95, 653,919.95, that amount, which totals all the budgetary items that we just went over, that less that, which is by their own admission, came out to a difference of 198,170.57. I was trying to tie that out to dates and I couldn't, But then what I figured out was at 30%, just over 30%, it comes out to 653 capitalized, 91995. So if they used a discount off a value of 852,090, if you discount that, that came out to about a 198,17057 discount, leaving a remainder of 653,919. That would be your COD net income after taxes. That's your IRS man stepping in and saying we want our pound of flesh. I think the IRS may be your joinder party in this. The IRS may come to your rescue and say, hey, you want to pay that amount? It's your home. We don't care who pays it. That's the amount that's outstanding on this recapitalization and all this other quackery or chicanery or whatever you want to call it, deep mind analysis. That's the IRS making their call, and that's why you have this ambiguous number just floating out here, 852,090.52, which again is a difference of 198,170.57 from the amount that we calculated as a budgetary annualized items that were listed in a total of, I think, 23, 24 years. That worked out to a 30% tax rate. That seems about right on COD income. Let's keep going. Let's wrap it up. I ask you to take a look at the USC regulations, 26 U.S. Code 26, it would be 15 U.S. Code 1641E, 1, violation apparent on the face of the complaint. This is where the lender or the party foreclosing servicer is supposed to get you a payoff statement within, I think, 5 days, 7 days. The case was brought before the 11th Circuit, and it reduced it says recently reduced the mortgage assignee's potential exposure to liability for services alleged violation of truth in lender TILA. The name of the case is Evento versus Fannie Mae. And in this case, Evento was saying that they did not get him, the lender or party representing the servicer for Fannie Mae was Green Tree Servicing LLC. Green Tree failed to get out the payoff demand in time. So go into the case and take a look at Evento versus Fannie Mae, and you'll see where the 11th District ruled in not so favorable way with what we're trying to say as far as the demand for payoff being timely and accurate. It said even though Evento allegedly requested a payoff balance from Green Tree but allegedly never received one, Fannie Mae's alleged failure to provide the payoff within 7 days is required. And Fannie Mae moved to dismiss the case. Let's continue right here. It says that, I'll wrap it up. Specifically, the court referenced the TILA provision stating that any civil action against a creditor for this violation, 15-1639, with respect to a consumer credit transaction secured by real property. Consumer credit transaction secured by a real property. This is a mortgage. What? Well, it might be a clue of what somebody else is trying to dial into. It said may be maintained against the assignee as such creditor only if, and this is the imperative thing, only if what? Only if the violation for which such an action or proceeding is brought is apparent on the face of the disclosure statement provided in connection with such transaction pursuant to that chapter, subchapter. It said that the court reasoned that Evento failed to state a claim based on Fannie Mae because Green Tree's failure to provide a payoff balance was not in violation, apparent on the face of the disclosure statement. That says that if there is something on that payoff statement which is indicative of a injury or something that is potentially damaging to you and they fail to give it to you, that would then be ground, I think, for you to bring the claim. Simply saying they didn't get this payoff statement in time with no collateral attack on the payoff statement itself is not going to cut it. Did I give you enough, I think, in order to show you the significance of a payoff statement? What I'm showing you is a monthly statement, and if the payoff statement deviates from that or even aligns with it, you've got major, major issues if I was a lender or if I was a party bringing a foreclosure, because you have something that is trumped up, fabricated, constructed. It's obviously not the proper characterization of the transaction, which is what I'm referring to here. As far as the codes go, I'd be looking at section USC 26, U.S. Code, sections 61. Take a look at cancellation of debt, 108, also for cancellation of debt and voluntary conversion. And this is all part of a section 751, 26 U.S. Code, section 751, constructive liquidation. There's more. Get a hold of me. I'd love to talk to you, and we'll tell you more. Well, it's been a pleasure hanging out with you, and I hope you got something from this case. This is an actual case. It has not yet gone to court. I don't believe it's been in court yet, or it may not have gone to a certain I don't know if it's going to be a claim brought in the federal district court or whatever, but we're looking forward to representing this client and seeing what happens. You obviously need to make a claim for proper characterization of transaction. I'm not saying what we discovered is illegal. I'm saying it's not disclosed or it's not transparent. And when you fail to properly disclose something, or you substitute a bond, the bond mechanics or the bond what would be called bond liquidation, constructor liquidation by partnership. When you're concealing that in a payoff statement or in a mortgage statement, then you failed to properly characterize a transaction, and that is going to be grounds for that. In addition to the excessive consideration, I would consider that engorgement. Saddling a consumer with all kinds of extra costs, fees, and charges. It's just preposterous that something like this could be happening with a bank that size. Anyway, what we need to audit your file, payoff statement, servicing statement. You can reach me at 202-270-2641. I'm not going to repeat that, but if you have to get a hold of me, you can try secondarytradedesk@gmail.com. I will repeat it, 202-270-2641. I'm at secondarytradedesk@gmail.com. And looking forward to talking to you. Looking forward to seeing what kind of cases you have. Special thanks to Lone Wolf and all the folks over there. And take care.